Hey everyone, and welcome back to another episode. So, this is actually part 4 of the special episodes that we have been doing. So, we actually did 3 other special episodes for additional training and just to give you that extra education and knowledge as to what's happening in the markets. So, this is going to be part 4, and it's actually going to be on the CPI and really what's happening in the US right now. So the CPI data just came out and inflation is back up on the rise. So inflation is currently at 3% and core inflation, which is just inflationless goods, food and energy, is up 3.3%. So this is crazy. Now, to give you better context, what this really means is that the average cost that you'd be paying for goods and services over the last 12 months would have actually increased by 3% and 3.3% respectively. And this is due to regular inflation and core inflation. So, as inflation has increased, the actual inflation rate over December to January has increased by 0.5%, while core inflation, on the other hand, has increased by 0.4%. And some really interesting figures to actually let you know what really is happening. So shelter is actually at 4.4% over the past 12 months, and it's actually up by 0.4%. And with shelter, it also means that rent is up by 4.2%, and that is up by 0.3% since December. And owners equivalent, which is really just persons who own mortgages rather than choosing to rent, is up, and it's currently at 4.6%, and it's up by 0.3% as well. So this really is saying that housing in the United States is actually getting more expensive as the months go by, and it really is due to the amount of housing that really is going up, and more persons are moving from home owners to actually home renters, and it's just due to the pricing right now. So there are a lot of different reasons why housing prices are at the rate that they are right now, and because of what really is happening, persons who would normally be actually owning a home, owning their first home, so millennials and Gen Zs, they actually have to be renting, and a lot of them actually have to be living with relatives, which is crazy. So this is really what is pushing up the renters market, and the housing market is really just due to just an increase in housing pricing, and so this actually has caused for the housing market to really see an increase in their actual rates. And another reason why this is so is because the interest rates actually have been high for the past 12-24 months. So with interest rates higher than normal rates, it's going to actually push up the cost of labor, it's going to push up the cost for materials, and then with all these added costs, it has to get offset somewhere. And so the construction, the builders, those sorts of people are going to incur these costs, and they're going to actually put it in their actual pricing that they have. And so when they sell it now to the realtor to sell, it's going to actually be included in the price. And so the break even point for these companies actually would actually be a lot higher than it would be 5-6 years ago. So this really has a lot to do with it. So if you're actually interested in learning more about real estate and how the prices are actually being affected, I would encourage you to check out the Ken McElroy show, and he actually has a video on that show right now. It's about 16 minutes long, where he actually spoke about the disparity between real estate and home owners, and actually persons within the economy that are seeking to actually purchase housing and renting. And he goes really in depth in it. So if you are interested in learning more about that, I'd encourage you to actually check out his show, and you'll be able to actually see that video on his channel. And the video is actually called Why Buying a Home is Harder Than Ever Before. That's the name of the video. So if you're interested in it, you can check it out. It's on the Ken McElroy's YouTube channel and also on his podcast channel. So if you prefer listening to the audio, then you can check that out as well. So wherever you get your materials, you can check. Now, as we actually continue with the inflation, there actually has been an increase in a few other sectors and areas as well too, which are important and for you to know, and also it aids in your stock trading and the decision making that you'll be having to do when you're deciding whether to purchase or actually sell a stock. So another important sector is the transportation industry. So the actual transportation industry has actually seen an increase of 8% over the last 12 months, and they actually have increased by 1.8%. But what is most interesting is that the motor vehicle insurance actually has the largest growth rate in inflation over the past 12 months, increasing by 11.8%, and it's actually up by 2% since December, which means that for persons actually owning a motor vehicle, you'll actually be spending a lot more on your insurance now compared to January last year. And interestingly, new motor vehicles actually has been seeing a decrease, so it's down about 0.3%, while used motor vehicles actually have been increasing in terms of the inflation as well. So this really means that as the cost of motor vehicles are getting more expensive, consumers are moving away from new motor vehicles into the used motor vehicles, and so driving the demand. And so with supply being limited, then the used motor vehicles would actually be more valuable, and so the price actually would be increasing, while new motor vehicles actually will be decreasing due to less persons actually taking up brand new motor vehicles. And so with that being said, the actual public transportation system has seen a 4.9% increase over the last 12 months. So what that means is if you're taking the bus, the taxi, you're actually going to be paying 4.9% more. And also for persons who love to travel, airfares have increased by 7.1%. Yes, 7.1%. And since December to January, it's up by 1.12%. So what that means is that if you are going on vacation, if you're planning vacation, business trips, or just to visit a relative across country, you're going to be paying 7% more on that airfare compared to January last year. So the airfare prices would actually be increasing by about 7%. So this means that it's going to be much more expensive than what you would have been accustomed to paying over the previous year. And at the lettuce, so fresh fruits and vegetables actually has seen a decrease in the CPI, but lettuce, which has been the talk of the town since 2022, has still been increasing. So it's actually up by 3.3% over the past 12 months, but surprisingly it's down by negative 0.1%, which means that since December it actually has gotten a lot cheaper, but it's still very expensive compared to last year. So that really means that persons interested in eating healthier would be better off seeking other fresh vegetable alternatives, as lettuce is still very high. So when you go to your grocery stores, you go to the supermarket, you go to the actual market, you actually would realize that you'll be paying a lot more for lettuce now compared to last year January. But the price that you're paying now should actually be a little bit cheaper than actually in December. So that really is it for the CPI. And Interestingly, with these data actually up and inflation still high, the actual markets have actually been doing pretty well over the past 5 days and year to date. So the actual S&P 500 and the Nasdaq index 1.13% and 1.82% over the past 5 days, which is still relatively good compared to everything that was happening. But the markets actually took a dip on Wednesday, which would have been around when the CPI data was released. So with that being said, it would have caused a dip in the prices, and so the markets fell on the day, but it has since recovered. And the CNN's Fear and Greed Index is finally, well, not finally, but it's actually very close to being out of the red zone. So it currently is at 44 and it's still in a fearful state, but it's very close to a neutral state. And the VIX volatility index, on the other hand, has been declining. So it fell about 8% over the year to date, and it's currently at about 16 points, which is really great. It's just showing that persons are really comfortable in the insurance and protection, eventually the options market. So it just having that additional insurance and protection for the actual funds that they would be investing in these companies has actually proven to be much more worthwhile and much more valuable, especially during times of high volatility such as what we are experiencing now. So at the beginning of the year, we actually had said that during our stock predictions, one of the industries and the in sectors that we believe and deem to be the sector to get into for 2025, not financial advice, was actually the banking sector. And you'd have noticed that over the past 2-3 weeks, if you've been following this channel, that I have not mentioned anything about the banking industry. And that really is because of the high volatility that has been experienced over the past few weeks, and just the fact that the actual interest rates have not been reduced. And with the CPI, I really was just waiting and watching to see what would happen with the CPI data. And since it finally came out and is currently at 3%, and so we actually had stated that if the CPI had reached 3%, then the growth within that banking industry should actually come to a minimal, and that actually is the case right now. So if you check the Dow Jones US banking industry, you actually would have noticed that the actual growth rate is currently at 10.91%, which is phenomenal considering everything that has been happening over the past few weeks. But the actual sector has been relatively flat since the end of January. So since about January 23rd, 24th, it has been very flat. So if you notice on the graph, the real growth rate actually occurred in the beginning of the year, and since then the markets have been very flat. And also interestingly, the currencies, so with the US dollar compared to other foreign currencies, and so with what's happening with the Dow Jones industry, the actual stocks such as Amex, Discover Finance, and Bank of America all are up over 4% year to date. So if you had actually invested in any one of these stocks, you could have been earning between 4 and 12% since the beginning of the year, which is great considering all that has been happening. Now, the US dollar has actually also been losing value compared to their international currencies except the Chinese currency. So the US dollar has actually been weakening. So it's actually costing international investors a little bit less to actually purchase $1. So whether you're purchasing British pounds, whether you're purchasing euros, Mexican pesos, it's a little cheaper now. Maybe not a full whole dollar in their home currency, but it's still relatively cheaper compared to a month ago. And interestingly, the gold and silver market has also been strengthening over the past few days as well. So if you notice, the actual gold market has been a bit flat since over the past 7 days, but silver has actually grown, and this really has been just investors moving their money out of the system and into these precious metals. And so by having your funds in gold and silver, it's really just hedging against the actual US dollar and the current market fluctuations, and also really a hedge against international currencies. So rather than having your money tied up in US dollars, in British pounds, euros, Japanese yen, Chinese yuan, you're actually diversifying and hedging against these market fluctuations. And so you're putting your money in these precious metals, which really is. So gold has actually increased by about 6.58% over the past 30 days, and silver is up by 6.46% over the past 30 days. And the past 6 months, gold has been seeing an actual increase of 15.31%, while silver on the other hand is up about 10.23%. So this really showing us that gold and silver are moving in the right direction. They're moving in the same direction. And so with that being said, the prices are also moving very similarly and very closely together. So what that means is that as gold increases in value and demand, so too does silver. And considering that silver was, as Robert Kiyosaki had shared on numerous occasions, severely undervalued, it seems that the price is actually getting closer and closer to their actual intrinsic value. And so persons are seeing more wealth and stability in these precious metals, and so they are moving their funds from the actual financial system, so whether it's stocks, bonds, mutual funds, so the paper assets, and more into these commodities. And so gold, silver actually have been increasing, and oil also is increasing, but we won't be talking about oil in this video. So but that is another commodity that real true investors are putting their funds in. So that really shows that investors are moving their funds from the actual paper assets and more into the commodities market. Alright, so that really is all that we have time for today. Thank you all so much for tuning into this session and into this episode, and I do hope that you have found a lot of value, especially in the past 3 and 4 episodes. So during the special episodes that we have been releasing. So if you like this session and this episode, I just ask you to give us a thumbs up or a heart wherever you consume your material. Leave any comments you may have down below. I love when you get in touch with me. I love to hear from you. And subscribe or follow us so that you do not miss out on any new episodes as soon as they are released. Until next time, take care. Love you guys. Bye.